Hey there, welcome to the show. My name's John Stevenson, and today we're going to be talking about possibly purchasing an annuity so that you can delay your Social Security and whether or not it makes sense. So if you are going to delay your Social Security payouts, maybe you're 60 right now or you're 62 and you're thinking, well, maybe I should wait and take Social Security at 65 or 70. I can maximize my payout. Should I buy an annuity right now, and then activate Social Security later on? That might be a good option. It just depends on you and your goals. I mean, a lot of times when people are married and if one of them has, one spouse has a much higher payout than the other, then sometimes they will delay that payout. Especially if they feel like they're going to die faster because they want to make sure their spouse has the higher of the two. And of course, delaying makes that happen. So it just depends on your goals. A lot of us don't want to wait that long to take it. But in this example, we're going to talk about how to use an annuity contract to give you income now so that you can retire right now, but still, take advantage of higher Social Security payouts later on. Because you have your annuity payout now, you don't have to activate your Social Security now. Okay, so I'm going to share my screen and we'll look at see what this could do for you. All right, so this is based off of someone in Oregon, $500,000, and they're 62 right now. Now, you're probably in a different situation. Maybe you want to put more or less money, but the best way to know for yourself is go to my website, johnstevenson.com, and check out my annuity calculators. Now, specifically, we are looking at the income rider because the income rider typically pays out the most in the lifetime income category. All right, so looking at this, we'll say, all right, well, $500,000, if I were to take it right now, is $36,850. Okay, maybe that's enough. Maybe you've got Social Security right now that'll pay you that, or a little bit less than that right now. But if you wait till 70, maybe your Social Security payout, will go up to $40,000, maybe $50,000 a year. That can be pretty significant. So you look at that and say, okay, well, I'd like to, I only need 36 grand a year. Okay. Or maybe you don't. Maybe you need less than this, or maybe this isn't enough. You're like, well, this isn't enough. Okay. Well, maybe you need to put more. Maybe you need to double it. Okay. But that allows you to retire early. You can't get years of your life back. And so that might be worth it. You say, all right, well, I want higher income. So I'm going to put $1 million in. Maybe you got $2 million or $1.5 million. And you're thinking, all right, I want to put as much as I can in, but I still want market growth. How can I accomplish my income needs right now without having to, activate Social Security? So if you do that, then $1 million gives you $73,000 a year. Pretty good. Okay. Now, if you're married, this is based off of a male who's 62. That will change the numbers. Okay. So let's take a look at that. Let's say your spouse is 62 as well. So we'll look at that and say, okay, it's not a huge difference. It's like 67 grand. All right. Well, maybe that's enough. You're like, all right, $67,000. What does that come out to monthly? Let's go up here and we'll look at that. All right. So $5,600 a month. You don't have to touch Social Security. And then, of course, when you turn 70, maybe you're waiting until 70, your Social Security is another 50 grand. Okay. Or 40 grand or whatever. Either way, you're at like $110,000, $110,000 a year in income at that point. And that might be worth it because you look at this and this is lifetime income. So this is never going to stop. Okay. So if you let this sit and grow, if you let this sit and pay you, then by the time you're 70, you've already got paid like 670. No, I guess not. By the time you're 72, you got paid 670. So I guess before that, you're in the 500. You've got basically half your money back by that point. And then of course, another 5 years after that, you probably get it all back. So make sure I'm doing my math right. All right. So either way, you're going to get your money back at some point, and then everything's gravy on top of that. You see the payouts just continue for life. Okay. So it just depends on what you're looking for. But if you're looking for a high income benefit, then this might be the perfect strategy. So if you can wait, take an income, of course, this income will be higher if you wait. So in hindsight, maybe you're 55 right now and you're thinking, man, I would like to retire at 62, but I'd still like to wait to take my Social Security at, age 70. That might be a perfect scenario for even more income, because then you could take that I'll just show you real quick what $1 million does. So if you $1 million, push it out 7 years. Now this will be different because this is older versus someone pushing out at 55 to 62. But I just want you to get an idea what this looks like. All right, so the income's substantially higher. Okay, substantially. We're talking like double, right? That's pretty good. So that's the power of deferral. So if you're in your 50s and you're thinking, I really want to retire early, but I still want to delay Social Security, I want to maximize the amount I can get from it, then this might be a perfect strategy. You can put some money in now in your 50s and then retire early at 60 or 61 or 62, okay? And start living on the income that you want to live off of your annuity, and then stack it with your highest Social Security payout later on, whether that be 67, 68, 69, 70, whatever, however long you decide to push it out for. So this could be a great strategy for retiring early and be able to take Social Security later on. Now, one other thing I wanted to point out. Let me bring this back down here. Just give you an example of what you could do with an accelerated payout. Most of my clients will not buy this, okay? But I want to show it to you anyway so you can see. All right, so $1 million from 62 to 65, 92,000. Yeah, I'm gonna say immediate. Let's go back to immediate. See if we can see any of the accelerated payouts. Sometimes I could see them here. All right, so higher income, 82,000 from NASA. Okay, give you a perfect example here. You're definitely getting more income. Okay, $82,000, and it lasts until 70. Look at that. See, this is the perfect strategy for having highest income from an annuity, not taking Social Security until you absolutely, you want to maximize it. Then this can be a great strategy because you're taking income, you're getting the highest amount, but then it drops to 50 grand for the rest of your life. So you have to be okay with that. So this allows you to retire early, okay? Have the income that you want early and not have to take your Social Security. That way you can delay taking Social Security at a predetermined age. And then once this goes down, your Social Security will make up the difference for the lost income from your annuity payouts. Because this is still a lifetime income annuity. It just gives you a higher payout for the first few years before it reduces for life. So this can be a great strategy for that. So I just want to kind of share that at the end of this, because when you go to my calculators, you go to my income rider calculators, you will see some of these options. You'll see NASA, you'll see Emeritas, American General Life. A lot of times they will show these higher payouts, and that is what these are used for. Okay, so you just have to realize that those will reduce after a certain time frame. Sometimes it's 5 years, sometimes it's 8, 10 years. Just depends on the annuity contract. So we can take a look at those if that's what you want to look at. So if you like the video, like, subscribe, share. If you want help from me purchasing an annuity, I'd love to help. Okay. There is a link below this video. It goes directly to my calendar, and we'll get on a Zoom meeting and I'll answer your questions and I'll help you get set up. If you just want to browse around and you're thinking, I don't know if I want to work with this John Stevenson guy and I just want to see what's available, that's fine too. Go to my website, johnstevenson.com, and take a look at my annuity calculators. Run the numbers for yourself. And then if you still want to chat with me and you like my help, I'd love to talk with you. There's a link on my website that goes to my calendar as well. So I'm happy to help you there. I'm not going to try to hard sell you anything, but I will show you what's available. And of course, if you're looking to purchase, I'd love to help. So anyways, I hope this video has been valuable. Hopefully you got some good information from it. I appreciate you for watching, and we'll see you next time.